Hey everybody, it's Greg Harrelson here with Century 21, the Harrelson Group, and of course, my co-host Abe Safa, also with Century 21, the Harrelson Group, and it's time for that market update, and let's kind of talk about what's going on in the local Myrtle Beach real estate market, and just know that every time we do one of these, the information, the data that we're bringing to the call is very current and relevant, meaning this data has been pulled within the last 24 hours. So you're getting the latest information as to what's going on. And so we'll get started. Abe, thank you again for joining me.
Yeah, my pleasure, Greg. So lots going on in the market, huh?
The Myrtle Beach real estate market has shifted, right? Are you comfortable saying that?
I am. I
Yeah,
don't think.
me too.
Yeah, I think there's very few markets around the country where anyone would doubt that.
Yeah.
Yeah.
It's interesting that you say that because I've heard real estate agent, man, my market is still strong, and the reality is most markets around the country, there's probably a few niches out there, but most markets are experiencing some variation, of what we're going to talk about today. So if you're an owner of properties in Myrtle Beach as a second home or as an investor, it's likely that even in your own marketplace, there is some shift occurring. Of course, I wouldn't, or Abe would not have the information or the data on it, but I can assure you it's likely the case. So, what is a shift, Abe?
Basically, a change in direction. So I do want to clarify something, or at least make a statement here. Our market is still very strong,
Yes.
right? So by no means are we saying the market is not strong. Right? It's just not on fire like it was the last 18 months. So when we talk about a shift, basically
Mhm.
all we're saying is, look, there is a change happening in the market. Okay, so we were heading in one direction where inventory was just going straight down, sales prices were going straight up, and now all of a sudden we're starting to see things change. We're changing direction. So that's all that means. Now, where will that lead to 3, 4, 6 months down the road? We don't know because things can change on a daily basis, right? But all we're saying is we're definitely heading in a different direction than we've been heading in the last 18 months. So that's what we mean by shift.
Yeah, yeah. And another thing is a lot of the information that we're going to share with you is we're sharing with the intention that if we give you the information, no matter what your situation is, no matter if you're a buyer, a seller, or somebody who's just going to be living in that home for the rest of your life, no matter what your situation is, all we want to do is just empower you with the information that'll help you make good decisions around your real estate holdings. And again, whether you buy, sell, whether you don't do either, that's fine. We just want to make sure you're informed as what's going on. So let's do a dive into the numbers, Abe, and then we'll also kind of talk about what some of those things may mean and how our audience should interpret them.
Absolutely. So the biggest change that we're seeing right now, Greg, is inventory is significantly starting to grow.
Yes.
So from where it was the last 18 months, from where it was, 3, 4 months ago, it's growing tremendously right now. So I'm going to scroll some numbers on the bottom of the screen in case I'm going too fast out there. So let's start off with single family homes right now. When we look at the current level of month supply of homes on the market right now, which is a key number that we look at when we look at inventory, it tells us pretty much how many months supply of homes are there out there. So that means if no other homes hit the market, when would we run out of homes? And right now, that number is 1.7 months supply when it comes to single family homes. Okay, so in the whole scheme of things, it's still a very low number. It's still very low inventory. If we go back 3, 4 years, that number was 6 months supply. So that's typically what a neutral market is. A 6 month supply is a neutral market. Keep in mind, 1.7 is still a very, very heavy seller's market,
Yes.
but it's up 31% from last year at this time. Okay, just if we go back to March, okay, where we bottomed out in inventory for single family homes, March of this year, we were sitting at a 1 month supply of inventory. That's up 70% since March. So that's significant. When you look at the inventory, when you look at the market, and every single month after month after month, inventory was going down. Now all of a sudden, 4 months in a row, it's been going up. To me, that's a change worth paying attention to.
Yeah.
So that's what we're looking at as single family homes. Closed sales were down last month, 23%. That's the total number of homes that were sold compared to last year, down 23%. And right now, the big number that we like to look at is pendings. because that tells us, okay, what's next month going to look like? And right now, pendings are down 8.4% compared to last year at this point. So that's kind of a snapshot of what's happening with single family homes right now.
Yeah, I just had this crazy visual in my head, and I
Mhm.
feel like I've got to share it with you, or with you as well as our audience. You've got to understand. So, like, if you listened 2 weeks ago to the show, Abe, I think you said inventory was at 1.3 months. Do you recall?
It's probably 1.3, 1.4, somewhere in that range. Yeah.
Okay, somewhere there. And then prior to that, it was less than 1 month, right?
Mhm.
Okay, so it was less than 1 month, then 1.3 to 1.4, now 1.7. See, you're starting to see a pattern.
Mhm.
2 years ago, Abe and I were talking to you all, and it was, let's just say it was 6 months, then 5 months, then 4 months, then 3 months. That was a pattern. You can kind of see which way it's going, right? Now, the real estate market, I like to think of real estate goes up and down like a plane, not a helicopter. A helicopter goes up and down like this. It's up here, it goes down, and it goes up, down, up. A plane goes like this, up, or kind of down, like a soft landing, and it levels off. So what you can kind of see here is right now it's kind of like a plane. It's just kind of like slowly softening. Now we don't know, is it going to pull back up? Is it going to go keep softening? That's why we come with you each week with this information, so you can kind of pick up on the patterns of what's going on. So there is no like up, down, crash, boom, bust. It's really kind of a gradual slope, and that's what we're starting to see forming right now. So 1.7 months of supply is, like Abe said, a significant seller's market. 6 months is where it's kind of like at that top, like 6+ months, buyer's market, 6 less months, seller's market. But I tell you the crazy thing, it's really, in my opinion, between the 4 and the 6 months, that's the balance. The 4 months is the beginning of balance, and 6 months is the end of balance. So we're at 1.7. If this goes along, it could be September, October, we could be at 4 months, which would be 4 month supply, which would be a balanced supply. And then if we get to 6, we're saying, well, that's still balanced. But if we get to 7, that's a buyer's market. And then if we get to 8 or 9, that's an extreme buyer's market. Now people are really starting to see. I don't predict we will be there, but I just kind of want to share with you how these things move. Sorry for
Yeah, I
the
mean,
interruption.
that's a great explanation, Greg. Yeah, I don't see us going anywhere near 8 or 9 months supply
No,
again,
no.
unless interest rates keep going up. Because the one variable that's really we
Yeah.
haven't talked about is buyer demand, right? So really, it wasn't so much that we just didn't have or had too many homes on the market, and that's why inventory is growing. The buyer demand got choked the last couple of months with interest rates.
Yeah.
So I think we probably lost about half our buyer demand in the overall market because of interest rates.
Mm-hmm.
So if interest rates continue to go up, then yes, we can continue to see inventory start to grow and grow and grow. But 8 or 9 months is way out there.
Yeah.
What I'm going to do is I'm going to share this graph, Greg, real quick, because it'll kind of give an example of your analogy with the plane. So you can see going back to April of 2020, this is the condo market. Where we're sitting at a 5.9 month supply of inventory, and you kind of see from April 2020, just like a soft landing, like a plane, inventory just kept going down and down and down, and then this is where we bottomed out at
Yeah.
0.6
That's the
months.
runway.
Yep, this is where the plane landed, and now look, this is February, right? So now we're already in July. Look at month after month how it kept going up.
Mm-hmm.
From 0.6 to 0.7 to 1 to 1.3 last month to 1.6 this month. So now if this continues to go up that way, then yeah, we're going to see it slowly transitioning into a neutral market, as you mentioned, and then potentially into a buyer's market. But we're still extremely low right here. We're still at 1.6 months supply relative to where we were back then.
Yeah, I think where we are in the market, whether it's condos or homes, I think where we are is to pay attention mode. We're in the let's pay attention phase. Let's pay attention phase is where I think our audience should be. There's nothing wrong with selling now. There's probably nothing wrong with waiting a little bit. If you're thinking about doing it, I don't think you should be rushing to do anything, but we should all be paying attention to each week that we come, come to you with this information. Pay attention to the patterns and what's going on, and then you'll make your decisions based on your motivations or urgencies to do something.
100%. Yeah, you can never tell. You can never say point it with a broad brush that okay, it's time to sell or it's time to buy, because it depends on what your needs are and what your wants are. If someone's
Yes.
now, I would be paying very close attention if you have an oceanfront condo right now, because that's where we're seeing the biggest gain increase in inventory. If you have an oceanfront condo and you're thinking about selling, this could be or should be the time that you strongly consider, right?
Mm-hmm.
If you haven't been thinking about selling it, it doesn't matter. It's all a moot point at that point. But I do think that we've peaked when it comes to oceanfront condos in price and in bottom of inventory. So I just switched the scrolling on the bottom to the condo numbers. Looking at the condo numbers, very similar picture to single family homes, a little bit more extreme than the single family homes. Like right now, it's a 1.6 month supply of inventory, up 33% year over year. So same time last year, up 33. Same time last year, up 33%. Now, if you go back to February, where we bottomed out with inventory, we were sitting at a 0.6 month supply, as I just showed in the chart. So going from 0.6 to 1.6, that's 267% increase in inventory. So to me, that's significant. That's overall condo market. Tremendous growth right now in inventory. This is the highest level of inventory since April of 2021. So that's something that's definitely got my attention, and Greg. That's something I'm paying attention to every single day and seeing if it's going to change direction. Again, we can't even control interest rates. So all of a sudden, interest rates drop again next month. We can easily see this go back down again. That brings more buyers back into the market. We just don't know what it's going to look like next month. As you said, all we can do is just give you the data as of what it is today.
Yeah.
Closed sales down 35% in condos year over year, and then pendings are down 19% right now year over year.
Wow.
So that's where we are with condos.
Well, good. Again, let's pay attention. Let's keep. If you're a condo owner, what I strongly urge you to do, because I'm hearing a little chatter in the marketplace that rental incomes or not. The rental incomes have been good. June was good. I hear July bookings are good. I have been hearing August bookings are a little bit light. So I've heard this from different rental management companies as well as even some hotelers that their August rents or their future bookings in the month of August are lighter this year than they were the same time last year. If that's the case, if that continues to be true, hopefully everybody's just last minute booking and they'll fill up. But if that's the case for some of these condos, you may have a little bit lower annual revenue. And if that happens, we'll see some people panic selling or moving to the market to sell, and that could dump additional inventory on the market after the rental season. I'm concerned that is going to happen, but again, that's me just looking at data and kind of predicting like, well, if this happens, then this is likely to happen. We're not in August, so we don't know what the revenue is, but I would recommend everybody go and look at what your bookings are in August. If they're a little bit light, talk to your rental manager. If you're doing your own Airbnb type of rentals, then do whatever you have to do to fill up your calendars and keep that revenue as high as you can. So, Abe, thank you again for bringing that data. I appreciate this. Hopefully the audience got some value out of this. If you all have any questions, you've got our cell numbers right there. You can find us on, you could just find us anywhere on Google, but please reach out to us, text us, let us know how we can do something for you. We'd love to help you. Thanks, Abe.
Thanks, Greg.
Okay.